I want to welcome the great Keith Neumeyer. He is CEO of the First Majestic Silver, which is a stalwart company in the precious metal space with 6,000 employees. Welcome, Keith.
Oh, thanks, Elliot. Great getting together with you today for the first time.
Yeah, it's great. So, a lot of commodities, proponents of like oil, uranium, they talk about a supply crunch, right? And how, demand will far outstrip supply. And so I wanted to get your take on kind of the current supply demand dynamics of silver, maybe even the future supply demand dynamics of silver. And if you see any sort of potential supply crunch occurring at some point.
Mm-hmm. Yeah, look, I think you should have gold, silver, and copper in your portfolio. Those are my favorite metals. And I've invested, in the mining space. Those are generally the places I put my money. I'm the CEO of First Majestic Silver, large silver producing company with three mines in Mexico and one mine in the United States. And it's New York listed, 6,000 employees. I'm also the chairman and founder of a company called First Mining Gold, which we'll also be talking about in a few minutes. Talking about silver, what really gets me excited about silver is the supply-demand fundamentals of the metal. I came from a copper company from the 80s, or late 80s, early 90s, and I learned about supply-demand and the importance of these metals in everything that we do on a daily basis. When I left the copper company in 2000, I had a choice. I'm an entrepreneur, so I wanted to start up another company, and I looked at the different metals, and gold made a lot of sense to me. But silver, when I really started to analyze silver, it blew me away on the supply-demand fundamentals of that metal going forward. And it was trading at about under $5 at the time, and I figured, Jesus, this metal should at least go to its old high, at $50 that it hit in 1980. And so I figured that would be, with my bullish view on copper and gold and of course silver, I figured, okay, we're right in the middle of a new bull market. The Nasdaq had just cracked. The Nasdaq had hit 5,000 in March of 2000, and over the next 3 years, it dropped by 80%, which was really the fire that lit the bull market in the resource sector, going. And so we saw, silver go from $5 to $50 over the 10-year bull market, and we saw gold go from $250 to $1,900 over that period of time, and copper went from 60 cents to $4. And then, of course, it all crashed in 2012, and from 2012 to really to date, 2019, 2020, there's been no investment made by the miners looking for more metal. Because it's very expensive. Mining is an extremely cash-intensive business, and with the political risks increasing around the world these days, with governments having their eyeballs on miners, even in some cases, calling miners, bad corporate citizens, which is a complete joke. But the mining industry as a whole, is being attacked today more than it ever has been in the 35 years that I've been doing this. And so the mining executives, who have to go find the metal first by drilling, and that takes years, and then developing and permitting something, which then takes years, and then finally getting some metal out of the ground to start producing it. You could be $500 million into an investment, or $1 billion into an investment. And then all of a sudden, the government changes, or the metal price, drops, and next thing you know, you have serious write-downs, and it causes all kinds of financial troubles for that company that took that extra risk just to try to grow and produce more metals. So that's not been happening. So we have a huge supply side on silver and copper right now. And it's showing up in price. I think it's going to show up in price dramatically more. But what's interesting now is we've got this whole new Green Deal. So we've now got a new buyer of a commodity that there's really not much around. So it's almost like a perfect storm.
Absolutely. So you're saying currently actually demand outstripping supply.
Mm-hmm. Right now, of course.
Wow.
Well, just look at last year's numbers, for example, or you go back 5 years. Go back to 2015. We've been consuming something around 1 billion ounces of silver annually, which is slowly going up, by about 4% a year. And a lot of it's now being driven by electric cars and solar panels and, all the new gadgets that we like to own and so on. But the miners haven't been able to keep up. The mine supply peaked at 880 million ounces back in 2015, and it's been dropping every year since. Last year's production number was around 760 million ounces of silver, and we're consuming 1 billion. So where's this deficit coming from?
That would be a supply crunch. So where would the deficit be coming from? Just stores of silver that people have had laying around?
Yeah, there is still recycling going on, despite the fact it's not very much. Silver at, $25, $28 an ounce, it hasn't been here for a couple of years. So recycling has increased. I think last year's recycling number was 150 million ounces of silver to be recycled. So that's half your deficit there. And of course, there's hoards around, people, investment hoards, people just cashing in some of their, coinage or bars, that they bought over the years. They get it from somewhere. I don't know exactly where they get it from, but that type of deficit, can't continue forever. Particularly now that we also have a new buyer, which is the Reddit crowd. We've got not only the industrials demanding more metal to meet some of the energy requirements of the planet, but we now have a new retail buyer that's waking up to the importance of silver and actually buying it and putting it away in their drawers.
Yeah, absolutely. So currently it's about 1 billion ounces consumed, which is just so much. Do you see that growing over the next few years even more?
Well, it has to grow because, I'll give you some stats. I did this research about 6 months ago for a particular conference that I was in, and so the numbers might not be exactly dead on, but there's approximately 1.4 billion automobiles on the surface of the planet right now. The automobile industry produces 90 million automobiles per year. Of that, 4.5 million are electric cars. Governments around the world want to get rid of electric cars, or want to get rid of fuel combustion cars and replace them with electric cars. So at a rate of 4.5 million electric cars being produced a year, how many years is it going to take to replace 1 billion automobiles sitting on the surface of the earth? That's not going to happen by 2030, which the governments are putting dates out there. By 2030, by 2040, we don't want any more fuel combustion cars on our roads.
Yeah.
Okay. So how are you going to accomplish that? Like how are the miners going to produce enough metal to build that many cars? It's just unfathomable. You need triple digit silver. You probably need $8 or $10 copper, just to incentivize the mining industry to make the investment necessary to build the mines to supply that metal. And so far, that's not happening.
How much silver does go into an EV?
Well, everyone's different, and there's lots of speculation on what it actually is. And these companies, I talked to Samsung, for example. I know these companies keep their this type of data very, very close to their chest because they don't want you front running them. So the estimate is around a kilo approximately of silver in one normal sized car, and then that's approximately 3 times more than what a fuel combustion car would. And today's fuel combustion cars, they're basically computer screens and very high tech electrical components. 50 years ago, a fuel combustion car wouldn't have consumed 5 or 10 ounces of silver because they just didn't have the electronics. But today, with all those electronics, that's why even the fuel combustion cars are consuming more silver than they did historically. But with the electric cars, all that is just a computer on a stack of batteries, and you've got 6,000 batteries in a normal Tesla, and these are battery cells. And this computer works at extremely high speed to keep these batteries, managed, because as they heat up, they have to be taken offline, and others heat up, they got to be taken offline. So it's a very complicated computer programming system that is managing this power pack that you're sitting on, driving this electric car, and you need a fast computer to do it. And silver and gold and copper are really the only three metals that can handle it.
Yeah, and that leads me to my next question, right? Because as commodity prices go up, producers try to find a way of using less of it or getting away from it, maybe finding another source. How possible is that? Are there any scenarios where silver could kind of be moved away from?
Well, industry is always trying to be more efficient. You look at a computer board inside our computers that we're using right now, and compare these computer boards to a computer board that was produced back in the 80s. It's going to be quite a clunky looking difference, right? And then we've been able to embed a lot of stuff in very small places, and that's done through fast metals. That's done through very complicated machinery and robotics and so on. And so with the case that really jumps out at me, to answer, I guess, your question more specifically, is the solar panel business. As you probably remember, there was, back, when solar panels first started to come out in the early 2000s, there was a couple pretty big bankruptcies of the solar panel industry, and they were using quite a lot of silver, and some people say their cost of production was too high, and that's what hurt them, and they couldn't sell it at obviously a profit, so they went bankrupt, a couple of them. So DuPont, which is the largest producer of silver paste that is used for solar panels, was able, for over almost a 10-year period, produce a silver paste that has actually less silver in it, and that's why today the solar panel industry is quite a booming industry. It's now economic and so on. So I've heard people talking about using tin or aluminum in solar panels as well, but it doesn't work. The efficiencies, it might be super cheap for a homeowner to put an aluminum solar panel on their roof, but it's going to have like a 5 or 10% efficiency. So yeah, you might get it at Walmart for $100, but it's not really going to help you much, right? So you need reasonable efficiency, and silver is really the best metal to do that.
Great. So there you go. Yeah. So we're talking cell phones, we're talking solar, EVs, supercomputers, just all going to be powered by these metals you're talking about.
And it's not going backwards. There's still a couple billion people on the planet that don't have electricity, right? So we're lucky. We've got all our gadgets and everything else, but but there's a lot of people around that want a lot more gadgets.
So just exponential growth as the adoption occurs.
Mm-hmm. Yeah.
So one thing I'm a huge fan of your company for, you guys sell bullion directly, right? Hard, the actual coins for silver, directly to consumers, which is just, I think, really smart. And so what kind of demand have you seen as far as the investment side goes?
It's been really exciting. We put it together, over 10 years ago now, and I think 11 years, and it was put together more as a bit of a gimmick for our shareholders, because we were, the shareholders were asking us, and we did produce a few, and we'd run out, and people said, "Well, I want one of those too next time you see me." So we started producing more and more of them, and then we just came up with the idea of putting them on our website and start selling them, and we started producing other products, and it's turned into quite a neat business. This whole Reddit crowd, which I referred to earlier, the millennials, they become a substantial buyer of physical metal, and then our sales, I don't want to get into numbers, but our sales are probably 10 times, 7 to 10 times higher today than they were 2 years ago, before this whole Reddit thing started.
Wow. Okay. So the investment demand is clearly picking up, and there's no reason for it to go down, right? Because the fundamentals for that just keep going up, right?
It sure looks like it's not going to go down. It's our biggest issue is getting enough product, and I'd love to be able to lower the premium, because we're selling at a $5 premium, which is historically pretty high. Normally, a couple of years ago, and most times we'd be in a $2 to $2.50 range. That was kind of your normal across the board. But due to this extra demand, and we just can't get any metal. If we lowered our premium to 250, we would be sold out in a day. And then we would have so many people upset at us that they can't buy anything. So people would rather just pay the $5 premium to get it versus, and not being able to get it. So that's kind of the rationale. But if that supply chain could fix itself up a little bit, and get some more products built for the retail customer, then that could help premiums into the future. But I just don't know what's going to happen because you've got, don't forget, the retail guy at our level, we're the last to get metal. The banks feed the silver and gold into industry, and the Panasonics and the Sonys and the Apples of the world, they need their metal, so they're at the top of the list, right? So the second the bank gets their block of gold or block of silver, boom, it goes right into the vaults for one of the big manufacturers. Maybe somewhere if there's a spare bar laying around that just happens to be sitting there, and they say, okay, go give this one to one of the mints, and let them have it, but they just get the scraps.
Yeah, that's just incredible. So you have a perfect storm almost, right? Because you have this insane demand for, silver bullion. Then you have growing exponential growth in the industrial demand. And so this is all just kind of leading to probably an expected rise in this very valuable resource. So do you see kind of a disconnect at all between the paper price and this demand for the physical? And what will kind of be the catalyst for shifting the paper price to kind of reflect this really growing demand?
Well, what I'm hoping, and it's the only logical thing that I think can actually accomplish that, is buying physical. When I do my tweets, and people are welcome to join me at Keith_Neumeyer, but I always put a tagline: buy physical. Because it's if we can pull this physical metal out of the market and take it out of the hands of these big banks, they know they can't get it, and if they start getting worried that they can't get it, and there's going to be some games that are going to be played, but the more physicals taken off, the less games are going to be available to them to do it. Well, one game just came up in my mind as I was saying this. Was when the SLP rewrote their prospectus, overnight. It was a Friday night, I believe it was, and that was when that big run up occurred in silver prices up to $30 an ounce, and they were getting a lot of buyers coming into the SLV, and they couldn't get the physical, so they changed their perspective to allow them to buy paper, and they just filled their order and capped the market at the same time with paper, and it's amazing that they're actually even allowed to do that, but that's what they did, and that's, in my opinion, anyways, manipulating the market.
Yeah, no, totally. And I was talking to Nick Barashef, and he was saying how all it will take is just either one billionaire or one multi-billion-dollar hedge fund to take physical delivery of just a few $100 million of silver, and just that would just kind of totally wreak havoc on the price, just like in the past it's been done, right?
Well, PSLV is doing their job, or doing what they can. They've last number I saw, they put 75 million ounces of silver into their fund since the beginning of the year, which is a decent amount of silver.
Do you think if someone just let's say they had some futures or options on silver, right? And they said, okay, I'm going to take physical delivery of $1 billion worth. I have a warehouse all set up. What do you think would happen to the market if just some shrewd investor decided to do that?
I don't think you would get it. If you're talking about COMEX, and I think if you for one thing, you can't take on that size of the position. The limit is 1,000 contracts per individual.
Okay.
On the long side. There's no limit on the short side, so that's the biggest flaw in the gold and silver markets. Yeah, it's nutty, but it's there on their website. You can find it yourself, and so they try to prevent people with like you or I or other funds or whatever to manipulate the market going up by letting someone go in and buy, tens of thousands of contracts. But if a bunch of Reddit buyers come in to buy a bunch of silver, they don't limit the banks from just standing on the offer and just keep writing paper contracts until the buying disappears.
Okay, that's a great explanation of what is actually happening behind the scenes there. So great. So I mean, we're talking, growing investment demand, just a perfect storm. Eventually, it's just going to be a matter of time before the market realizes how valuable silver is and the paper price even moves. So given that, can you speak a little bit about First Majestic and how you're poised to take advantage of the growing demand in silver and kind of some growth drivers of the company?
Sure. Well, we just bought a mine in Nevada, quite an exciting mine. It's our first foray into a jurisdiction outside of Mexico. We've been in Mexico for just coming on to 19 years, and we know Mexico quite well. Obviously, Mexico is the largest silver producing country in the world, so as a silver producer, it makes a ton of sense to be there. And but we just felt that with all the political risk these days and some of the things going on in Latin America that I'm not particularly thrilled with, particularly Argentina and Peru and now Chile. I just felt that it would be best to spend our shareholder money investing in Nevada, which is one of the best mining jurisdictions there are in the world. So Jerritt Canyon, which is the mine we bought, we're going to be doubling its size over the next couple of years. Our target, which we've been telling people, is to get it up to 200,000 ounces of gold productions. Currently, last year it produced 112,000 ounces, so it's almost a double. It's going to require money and time, of course, to get there. But our team is very capable of that, and we're turnaround artists. We love buying mines that are underperforming for some reason. Either they don't have the capital, there's a technical issue that they're having challenges getting by, or maybe they don't have the right people, or whatever the case may be. We've just been you go back and look at our M&A activity over the last last couple of decades. You'll see that we've always been opportune in picking up assets and turn these mines around into nice cash flowing operations, and that's what we intend to do with Jerritt Canyon. And we're always looking around for other mines as well, where we tend to be pretty aggressive company in the M&A space, but you just don't know when these types of deals happen.
Absolutely. No, that sounds great. So you're buying kind of fixer-uppers at a discount, and then your competitive advantage is adding value to them and getting an ROI, a great ROI on that deal, right?
Yeah, that's
great. Cool. Very exciting. Yeah. A good M&A team is extremely valuable, right? If it's an accretive acquisition. So very cool. Yeah, I like that strategy personally. And then, so do you see any, like you're saying, you're in Latin America, Mexico. This question has come up. Do you think that the way they're acting towards mines will be a further constraint on supply going forward if they keep kind of putting a squeeze on some miners?
Absolutely, 100%. Because it's not going to happen, overnight. But when it does happen, it's going to be dramatic. Because what generally happens in these kinds of cases is it almost comes down to expropriation in a way. They will limit your activities. They'll limit your export of gold and silver. They'll put cost controls in place. They'll put controls around what you do and then how you do it, and all those types of things that they continually do in the name of socialism or whatever you wish to call it, only drives costs up. So the per mining company can still own the asset, but they're finding their costs just constantly creeping up. Their energy costs. Now with oil prices, of course, but I'm talking about electrical energy or taxes or what have you. Their costs just continually go up, and then they say, "What the hell? We don't want to be here anymore, right? And we're going to shut this puppy down, and we're leaving. See you later." And when that happens, 1,000 people lose their job, and maybe the government tries to get it going again, which never works because they governments can't really run businesses very well. So yeah, the metal disappears, and that's that.
Exactly. And then the supply crunch gets even worse because the demand isn't going anywhere, but all the government just, even in America, have you noticed some some pushes to kind of tax mines more and try to regulate them even further? And could that contribute to further supply crunch in America?
There is some states that have talked about that. We monitor it pretty closely. A lot of it's coming from a minority. The big mining jurisdictions in the United States are really Arizona and Nevada, these mining companies are quite large, and they pay a lot of taxes, and they have a lot of political clout. So yeah, there's always people asking for more money from the miners, but I don't think they'll be successful.
Great. Yeah. And even if they do, well, then the price will have to rise to incentivize actual output, which is direly needed, right? Excellent. So yeah, you're also founder and chairman of First Mining Gold. Would you mind sharing a little bit about that exciting project?
Sure. Well, it's a multiple group of projects which I've assembled in one company back in 2015, 2016. And, the similarities between First Majestic and First Mining are, I was able to put both of these companies together at the bottom of the cycle. I put First Majestic together in 2002, through 2004. No one wanted to be in mining. Mining assets were pretty cheap, and I picked up a really nice portfolio of silver assets and turned those into, reasonably sized mines over the next decade. In the case of First Mining Gold, what I noticed in 2014 was that all these gold assets were just trading at these such ridiculous valuations. And, less than $10 an ounce of gold in the ground. And, you have a million ounces of gold, and you have a market cap of $8 or $9 million bucks, and it costs you 20 or 30 million just to prove up that million ounces of gold. So, it was pretty compelling. So me and my technical team did a scour of the planet and looked at over 100 companies. We created our target list, and I started approaching these junior companies, and I was successful in convincing 6 of them to merge with First Mining Gold, which we did, and so it gave us a pretty nice portfolio of gold projects, some of the best gold projects in the world, and they're all in Canada. They're all in Ontario and Quebec, and one's in Newfoundland. We've been doing deals on these. We didn't really intend to bring them into production ourselves, even though we are advancing them and de-risking them, getting permits in place and all those things. We're doing that. But the intent is likely not to actually go into production ourselves. We'll probably be doing that with partners. So we have partnered on a couple of the projects already. The Hope project was just partnered a couple of weeks ago. Pickle Crow was partnered about a year ago. And the one that I need to tell you about is Goldland, which has been in our portfolio since around 2015. And the neighbor, a company called Treasury Metals, bought that Goldland from us because it's right beside their property. So they combined 2 nice looking gold projects into a single company, Treasury Metals. And they're much more advanced on the permitting stage. So that's why we did it, because it's going to fast track that mine to get into production. So we ended up getting 44 million shares of Treasury Metals and 22 million shares of, 11 million warrants. And we're spinning out half the shares to shareholders in the next couple of weeks. So anyone that owns First Mining Gold will get this free Treasury Metal share in their account for nothing. It just will show up. So it's just a one-off special dividend. You have to own the stock. If you don't own it already, you'll have to own it by around July 10th is about as far as you would want to go out. And then the date that they're shooting for distribution is either the 14th or the 15th. So you look, if you own it, look at your account on the 15th, and you'll have these shares and these warrants in your account for nothing. And if you're curious on how much you're going to get, you can actually go to the website, firstmininggold.com, and there's a calculator there. And if you put in, let's say, 10,000 shares or 1,000 shares, whatever the number is, it'll spit out how many Treasury Metal shares and how many Treasury Metals warrants you're going to receive in your account.
That's so cool. So yeah. So every shrewd investor knows that you have to buy things on a deep discount, right, to really get a big return. So you pretty much almost got it to the bottom of the gold market,
Yeah.
pennies on the dollar. You turned it around with your team, which seems to do pretty good work, right? Turn minds around really quick, and now you just have this serious, valuable asset on your hands, which is really cool. So now, if we own shares of First Mining Gold, there's this special dividend that's coming.
Yeah, that's right.
Wow. Okay.
Mhm.
Very, very.
And people should go to the First Mining website and look at the PowerPoint, because it's got a whole portfolio of really exciting gold assets. And of course, getting a dividend, for free is nice as well. But we hope that people own the stock for other reasons as well, because the portfolio is quite good.
Great. So you think long term there's going to be a lot of growth, and in these assets that you acquired, just a lot of growth, and even the gold stock price, bullish fundamentals, right?
Yeah. Yeah. Well, First Mining is a very well financed company. It's got over 40 million in the bank. It's got 120 million in assets in the form of stock in its partner companies that it's done deals with. So it doesn't need money. It doesn't need financing for many years into the future. And it's just going to keep monetizing assets. And if our partners end up doing well with the portfolio that we joint ventured with them, their shares will go up, and of course that's going to be great for us as well.
Great. Yeah. And it seems like you're investing in the space right now. You're, like you're saying, there isn't a lot of activity, but you are going in right now.
Yeah, I wouldn't be buying stock if I wasn't a bull, for one. And I think that this bull market started, a couple of years ago, and we're probably 2 years in for like a 10-year cycle, I'm expecting. So so a 10-year cycle compared to the last 10-year cycle, which ended in 2012, you had gold that moved up 8 times and silver moved up 10 times. So I'm expecting similar kinds of moves in this next cycle. So my favorite stocks, I'm very disciplined. I have a list of my favorites, and I'm always got bids in them, at somewhere maybe below the market, and help support the company, but also add to my position. Sometimes bring my cost down, because as Rick Rule says, your first purchase is always going to be wrong, right? And if you have to be prepared to be down 50% on your first purchase, and if you have that in the back of your mind, that means you should split up your purchases by at least five separate purchases over a period of a month or two, right? And you get a decent ACV, or average cost base, and that's exactly what I do. So when we had that big drop in gold a couple of weeks ago, some of these small juniors were just crushed, and I had some bids 10% under the market that I would have never expected to get filled, and I ended up buying three or four companies that day, and I was okay with it. I was shocked, but I didn't mind doing it.
Great. So there's still a lot of undervalued assets right now. You're taking advantage of that. I do think eventually the straight line tech stock chart and gold will reverse. I mean, it has to, just like in 2000, right? The tech bubble crashed, resources went straight up. So you're gonna be very well positioned for that.
Yeah, well, that's what I'm expecting. And I was pretty well positioned back in 01, 02. I lost a little bit of money on the tech boom. I shouldn't have probably even traded the tech because I knew nothing about it. But at least I was well positioned in a couple small companies, and then I put First Majestic together right at the bottom of the market as well. So that obviously helped.
Perfect. And there you go. That's how it worked out. Is there anything else you wanted to talk about before we wrap up?
No, I think we're good. I think the dividend was an important one, and I had to get out. I think there's real benefit for people in that. And then just go to the websites. I would suggest do your own due diligence. Mining stocks aren't for everyone. Some are quite risky, so be careful. Always invest in management first. If you like a company because you've read about it somewhere, first thing you do is go to the management instead and look at their history and see if they've made people rich before. How many millionaires have they made? How many have they built $1 billion company? If they have, most of the time these successful people will have another success. you reduce your odds by so much, or increase your odds so much of success is what I meant to say. But reduce odds for failure, because a lot of you get a lot of very new people in the sector, and then they may be the most honest people in the world, but if they don't have access to the financial markets, they don't have access to proper technical people, then they can have an interesting asset in the portfolio, but they can't do anything with it because they just don't really know how to do anything with it.
Yeah, and we talk about how your competitive advantage is your team and the ability, the knowledge to just turn these minds around, which is a secret sauce, I think. So, all right.
All comes down to people.
Very cool. Well, thank you. Thank you so much. You provided such great information to us. Where can people go to learn even more from you?
Well, my Twitter account, Keith_Neumeyer, and then obviously First Majestic's website, firstmajesticsilver.com.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.